The sneaker market has officially crashed.
There's a drastic shift going on in sneaker culture right now.
What is going on with resell?
Is resell dying? Are sneakers not it anymore?
The sneaker market is down bad right now.
Sneakers kind of suck right now.
Devastating news today for a major company that calls Oregon home.
That's Nike. On Friday, the company reported its worst sales day on record. Stock prices plummeted 20%.
Adidas warning of a sales decline in its overstocked North American market in 2024 as it continues to sell off its remaining Yeezy inventory.
The sneaker market's not dead. The sneaker market, as most people understand it, is dead.
This is Johnson, a sneaker collector, a sneaker reseller, and a personal business mentor of ours here at Common Hype. And today we're going to be talking about the current state of the sneaker market.
The sneaker market 2 years ago, as we knew it or as people got involved in it, that market is dead. It's different.
How he's taking advantage of the current state of the sneaker market and even investing in some sneakers because he sees them as assets still.
I mean, there are hundreds of pairs of Bred 4s.
And we'll even talk about stores that have previously closed, what they possibly did wrong, and what current sneaker owners possibly watching this video can do to adapt to the current state of the sneaker market and stay in business throughout these tough times.
They just got set up wrong. Because no one was giving them advice. No one was giving them input.
With that being said, let's get right into the interview with Johnson.
What does that do?
That's just so that when we cut the footage, we can cut them both at the same time. So the clap just gives us a point of reference to where we can sync them.
That's it, then. That's the answer.
Okay. All three cameras at the same time. Yeah.
Sync it.
YouTube, what is going on? It is a very special video today because we have the man, the myth, the legend himself, Johnson Sneaker Co. in the building. And it's been quite some time since Johnson's been in the video. How does it feel to be back?
Feels good. It always feels good to be in this room in general, and it always feels good to be hanging out with you guys. And what we're going to talk about today, just good topics, and great to talk about sneakers and investment and buy low, sell high.
Going into the Christmas holiday season, I wanted to briefly talk about kind of what's moving best for you specifically, what's moving best for Common Hype, and how we can kind of compare and prepare for the holiday rush that's coming up, especially now that back to school is pretty much over for the most part on both the East and West Coast. I want to talk about this huge stack of sneakers behind me. I mean, there are hundreds of pairs of Bred 4s that we'll get into later in this video. We also have some other random SKUs. There's a bunch of Yeezy slides sitting on the ground right here. You guys don't even notice because you guys can't even see in the angle. We've got Travis Canaries sitting all over the place as well. And maybe if you're just watching this video, you have no idea who Johnson is, who Common Hype is. You're maybe looking to get into sneakers yourself. You want to maybe deploy some capital. Maybe you're an investor who likes doing stock market stuff. Johnson does the same. I put some money into the stock market too, but there's a reason why there's a lot of money into Bred 4s right now rather than in the stock market, which we'll talk about later in this video as well. Also, real quick, we're gonna give away a free pair of Yeezy slides. I've just decided right now. We're gonna give a pick your size, pick your color in any Yeezy slide. Basically, that's out there. All you gotta do is comment your favorite part of the video down below, comment your size, and then subscribe and like this video. That's it, very simple. We'll pick a winner in 1 month after this video comes out. So if you guys want a chance at that, all you gotta do is follow those steps down below. All right, well, let's talk about kind of where you're at personally with Johnson Sneaker Co. first. I mean, obviously this room has transformed many different times. When we first came into this room and the viewers saw you, obviously we did a sneaker collection video, but then there was also a bunch of University 4s at the time.
Yeah.
And you had put a lot of money into that, and that was a really successful investment for you. Now, that was back during COVID and when times were different, but kind of talk me through what's evolved in this sneaker.
What's similar, what's different?
Yeah.
So what's similar is the silhouette. It's a Jordan 4, popular Jordan silhouette. The other thing is the colorway. UNC is a wonderful colorway, and a Bred is an iconic colorway. Obviously these have a leather instead of the suede, which I think is a difference. These could be potentially more wearable in a sense. I felt like it was a great shoe to put money into, and if anything, it wouldn't go down. You know, there's a few things you can invest money in that have very little risk of going down, and just felt like a Jordan 4 Bred was one of them, especially when it comes to the shoe market today and how it responds. The other thing that's different between this and the UNC is acquisition price. So we were buying the UNC's 4s at, you know, $320, $330. Actually went back and looked at it the other day because I was explaining to somebody this investment. But this acquisition price was around, you know, 250, 260. So it's nice to have an investment where the acquisition price is lower.
Significantly lower.
Significantly. Because if you were to get a $50 raise in this, you're talking, you know, 20% return. If you get a $50 return on the 300 and something, you're talking about 15%.
Sure.
That's where I think a lot of things are misunderstood about the sneaker market right now. There's a lot of talk about it's dead. Look, it's different. Which the sneaker market 2 years ago, as we knew it, or as people got involved in it, that market is dead. It's different. But I don't think the sneaker market, as far as how people have been able to shift and stuff, is dead at all. There's money to be made. You just can't do it the same way that you did it 2 years ago. I would say there's probably 600.
So 600 pairs of Bred 4s.
Yeah, 500, 600 pairs.
At an average cost of between?
Well, between the grade school averages in, you know, around the 165, and there's a specific number, right? In any investment, you know, so it's 165.41 cents.
Sure.
But and then the men's is probably somewhere around the 262, and it's higher than what I wanted. And the interesting thing is that how the market responds today is different than a couple years ago. So the UNCs got to buy them as quick as possible because there was never a point to where it was going down.
Yeah.
This pair was released in the early part of this year, after the holiday. And so it hit and it was up there, and there was people. Sneaker Invest is a great person to follow. The guy just knows his numbers and stuff.
He's really good with the calls.
So this stuff hit at, like, let's say 270, and was just going to continue to go down until back to school. You know, July time, June, July.
For us. Yeah.
I just wasn't patient enough to wait to be buying in the May and June time, and so I was more buying in that April, May instead of May, June. And so my acquisition price about $10 more than I would have liked it, or what I would even have guessed when I was doing it. It's just one of those things that you know, you get into a mode where you're acquiring and you want to get the acquiring done so that you can move on. I mean, there's other things that we're doing.
I mean, it's like an itch, honestly. We were talking about this yesterday.
Yeah,
It's just
so you got to be disciplined. I'll probably sell 40% of it this holiday, maybe 50% of this hold, which it's holding shoes is not something I would, you know, encourage.
Right.
But I'll sell about 50% of it this holiday, and then I'll sell another 20% a year from now, back to school, and then sell the remainder next holiday. So I'll be out of this in about 16 months.
You said, we mentioned before this video, it's about 130 grand investment into Bred 4s. What is your target sell point? And what is your target profit number? Like, what are we thinking? You think 600 pairs, if putting 130 into it, you're gonna get 160 back over time? Is that the number?
Yeah, I mean,
are you looking
great.
for like a margin? Are you looking for a certain dollar amount per sneaker? Like, you want 30 bucks for example? Are you aiming for a price point of 300 to get out of it? What's kind of the...
Yeah, I would think overall, based on how the market is now and how I acquired them, about, you know, so if my acquisition price is about 130,000, what I really wanted to do is be at about 115, 117, and how the market is, I could have done that.
Yeah.
I just didn't.
Yeah.
So when I look now, if I'm able to get 160 out of it, I think I would look at it as a successful investment in regards to it. The challenge in that is that's holding my capital hostage for, you know, I'm going to sell half of it, you know, I'm going to hold that capital for about 10 months. So a 20% return on my money over 10 months, you sit there and go like, well, oh, that's an unbelievable investment. That's over 20%.
Right.
But what you have to think about is all the time and energy to acquire them, to store them, and do it. But I have my son, who's helping me. So if he can make some money while we're doing that, and then shoes are fun. And so
it's a bonding moment for you and Sam. Yes.
For sure. He gets to make he gets to actually work to earn money instead of dad just giving money.
Right.
Which is never a great idea.
He's getting numbers. He's
processing. He's boxing stuff. He'll work his tail off in November time,
Yep.
Getting half of these shoes out of here. In light of it, I'd really like to make a 30% in order to do all of that. But I think in light of where we acquired it and what we're doing, a 20% return, I'd be happy with. We're going to be able to attain that with this shoe. But as we talk through more, like, the military blues as a quick flip have been a better option because I can turn the cash quicker. But yeah, that's the bread. That's the bread investment.
Why bread 4s instead of like another 4 that's released recently, like an oxidized green 4, right? Or even a white Thunder 4? Why not? Or are those still shoes that are potentially on your radar?
How I deploy capital in the sneaker business has changed in the last 6 months.
Okay, started. I want you guys to know we're doing a free 7-day trial to Strike. What you guys are gonna see and learn in this video is absolutely invaluable and hugely crucial to your success as a reseller, as a store owner, as a consignor. If you guys want to join the group, there's a 7 free day trial. All the things we talk about in this video are talked about in a daily basis in Strike. And not only that, we help you acquire shoes. If you're not someone who is able to get Onyx 350s, we can help sell them to you or purchase them from you if you're a buyer or seller from member to member transactions. If you're someone who has no idea how to get Thunder 4s for retail when they drop, not only do we do free ACO for members who want to come in, we run the bots for you. You don't got to do anything, just give us your card information. Obviously, it's all safe. We also tell you where raffles are dropping, any shock drops that are happening, amongst several other different features that we offer. So 7-day free trial, there's absolutely no risk to you. Cancel at any time if you're not enjoying it for whatever reason. But if you guys want to have a one-on-one conversation with me, learn more about the market, and learn from other people within the group and see what their insights are on the sneaker market, hit that link in the description down below. More on that later in this video.
Hey, the only risk is that they come in with the perception that they've my 7-day free trial and that because it's free, it doesn't take any effort on their part.
Correct.
That's crap. It takes effort. Okay, you're gonna pay for something, you're gonna get some value, but you're gonna make effort. So nothing that you do, you can do and just think it's gonna be free and it's gonna come at you. Pay for the service, it's worth it, make an effort and you get value out of it. And if you can't understand how a value comes out of paying $50 a month or whatever it is,
50 a month.
well, then you're not making effort. So the risk is that somebody comes in with a perception that everything's just going to get handed to them. It's not the case. It's never been like that in life.
Yeah.
Okay. Stimulus checks are over. Okay. All right. We go make our own money.
You heard it.
So join.
Johnson's in Strike too, so come join.
Yeah, let's do it. Okay. So whereas
Since you started buying this call, it's kind of
probably after, right?
Okay.
So after buying this and having them continue to go down in what I predicted, but I wasn't able to execute, and that's just a fact, guys. And when you're thinking, oh, Johnson, can hit this and do all this, no, there's mistakes made in it, and how do you hedge yourself in order that you can protect against, a shift of 10%, and you do that by just having a margin of safety and working through it.
well, in the stock market, it's just dollar cost averaging too.
Well, stock market is the stock market should be done the same way. The challenge is that we'll sit in this room, we'll talk about a stock, we'll get excited about it, you'll run home and you'll just go click on the app to go buy some stock, but you don't know nothing about the stock. You don't know nothing about the management of the company, you don't know nothing about their earnings, the balance sheet, what their debt is. That's not how you buy stocks. You buy stocks by learning what the company is, because you're buying stock, you're buying part of the company.
Right.
So you should know about the company. So when we talk about this shoe, I could have told you everything that could be known about this shoe, about the Jordan 4, about trends, about volume, about how many stock there is, so forth and so on. There's nothing that I didn't uncover in order to make this investment. Yeah. It wasn't just a feeling.
Right.
It was going back over the numbers and looking at
how
it.
they store any potentially factory flaws or things that could devalue
taking into
the shoe.
consideration the fact that it's not a Bred 4.
No, it's not that leather.
It's not like the Bred 4 I grew up on and that it's been released 3 or 4 times. This is a leathered Bred reimagined.
Right.
It's not as good. Mm-hmm. So what is that going to do? And so those things are all factored in.
Comfortable though.
I mean, this is the. May I?
Yeah.
So this is the best 4 that's dropped in a long time, short of the military black.
Correct.
Which is something that we invested in and did. But this is the best 4 that's around. Mm-hmm. I mean, and it's no surprise that in a tough economy, this has just continued to hold firm.
Sure.
But this shoe will not go up any more than what it is because there's certain price that things just plateau at. Those UNC 4s we were talking about, they're not over $450.
Same with Oreo 4s.
Same thing I was selling them for 2 Christmases ago, which is crazy.
It is.
So shoes have a, they plateau.
Yeah.
So why not this shoe?
Well, not
Go
necessarily
ahead.
because this shoe wasn't out when you were buying Bred 4s. But like when you're looking at this shoe right now, we've talked about both the oxidized greens and Thunder 4s, for example. Oxidized greens, I think, is a fantastic shoe. I know you're not a huge fan of this glitter green. This is so much of a better green. I agree.
Agree, right? Acquisition price is way different.
Right.
It's not great. You shouldn't be buying shoes unless you have someone to sell them to in November, December, January, February, March, June, July, August. You shouldn't be buying shoes then. If you're sitting there in the game and sneaker game and you're going like, sneaker market sucks, it's dead, I can't make any money, but you bought all your shoes then, and then they've gone down, and then you're holding on inventory because you're like, I bought it at 300 and I'm trying to sell it at 300. Well, you bought it the wrong time. It's all about how you buy shoes, when you buy, how you buy, and then when you're selling.
This is kind of off topic-ish, but if this shoe you bought at $260, let's just say something happened and market for some reason went down to $230.
Yeah.
If they just did a huge worldwide restocking, and it's not gonna happen. But
sure, no, go.
Are you someone that's like, okay, I'm down $30 a pair, I'm just gonna get rid of all of them, and then potentially dollar cost back in and buy that shoe since you believe in it so much? Are you someone who would just stick at it, be like, okay, look, they're at $230, I still know they're gonna be, $280, $300 during Christmas? What would you do in that situation?
Yeah.
Because a lot of people have done that with, it doesn't have to be a Jordan 4 specifically, but I know several people have done it with Travis Canaries. They thought 6.5 women through 9 women were so low that it was going to be a great price. Well, there's so much stock out there in those sizes. So they're kind of like, I bought 280, right now they're like 220 on StockX. What would you do in that situation?
So when fundamentals don't change, so if we take it and compare shoes, which we are, to the stock market or a company, when you go and research a company and you do the research over and over, and you're like, man, I see that this company is going to be here in 10 years. Well, companies have downturns and up, they go up and down, but if you have in your mind, you're like, I know where it's going to be 10 years from now. And so you go and buy that stock at $150 and you're like, that's a great price for this company. I'm going to buy it and I'm going to hold it for 10 years. If that stock goes down to 120, I hear all the time, oh, I've lost $30. You haven't lost anything. You don't lose anything unless you sell it. If you believe in what you did for the work on 150, you should buy more at 120 if you have the capital.
Correct.
But to sell the company, to get the capital back, believing that you can deploy it in some other way to get the money back based on the same fundamentals, the company fundamentals haven't changed. They just did a earnings report that was off a little bit. It was off 10 cents a thing. Their sales were off 0.5%. Like when you think about the emotions that happen in it. So I would look at shoes the same way. If these breads go down, and they will, they're at 270 right now because they went up for back to school. They will come down in September, October to 250. If I'm in at 260, I'm backwards. But I'm not selling because I believe in the fundamentals that I've done, that they're going to go back up in Christmas, come back down, go back up in next school year, and I'll just stay with my plan. And I think what people do is they get in it, they emotionally change what they made a decision on with indicators that happen.
Yeah.
It's like your business. You're investing in Common Hype, right? Okay. The economy is a little bit different than it is a year or 2 years ago, right?
Totally.
Are you getting out of it?
No. So chugging along.
It's hard to get out of it, right? You can't go on your phone and press a button, sell, and you're out of Common Hype.
Right.
Ooh, sell. So you stay in it, which is the best interest of you and your family and your wife and your baby on the way. Congrats.
Thanks.
So we should cut that? No, you
everybody
posted
knows.
it. Okay. Yeah, you posted on Instagram. You can talk about it now.
Yeah.
The fundamentals don't change. So if this goes down, am I buying more into it? No, because I got enough capital invested in it.
Okay.
There's other things I would rather deploy my capital in September, October for selling in Christmas than the breads.
Sneakers specifically, correct?
Oh yeah. Yeah. I mean,
what would that be?
Which ones would they be?
Because for example, this shoe has been, this is good.
Well, that would definitely be one of them, but this would be not something that I would be buying and holding at all, because there's a lot of money to be made. This shoe will plateau or go down over September and October, okay? Right now it's at 240 to 260 depending on sizes, okay? It could go down a little bit or it could stay right at that. I love buying the shoe at 250.
I agree.
Which I've already bought some at 250.
Yep.
But I'm not buying more than what I can sell in the holidays.
So this one you only have an outlook for end of December.
Oh yeah, because I'll buy them at 250, let's say, and I'll get about 300 selling them at the holiday time. I'm making $50.
Yep.
A 20% return and deploying my capital for 3 or 4 months.
I mean, that's...
I love that.
Yeah.
But if you say, well, you idiot, why didn't you do that with 130,000? Well, I can't. The money does. The money works that way, but this doesn't work that way. Yeah. If I put 130 in this, I don't have the sell out. I can't sell them that fast. So when you think about making investments, you have to understand how your selling channels. This shoe color blocking is phenomenal. So white with green, great color blocking. I don't like the metallic glossy.
Okay.
It's just my own personal. But man, I love the fact that I can buy these for like, what, 140?
Do you think there's a better spread on those specifically? Because I mean, if you look at like the metallic 4-pack that came out, was it 2019, 2020, something like that? You got the metallic red, orange. You have some. You have them. Metallic red, metallic orange, metallic green. I think those are like 170 right now. They could be like a 220.
So sure. And that's where percentages, you can get lost in percentages, but you got to understand how stuff moves. So if I can buy the grade school ones at 180, I'm just 170, whatever the number is going to be, right? There's going to be a lot more sold quantity wise in the holidays than this.
Sure.
So you can run the numbers all you want and buy at 170, sell at 210, $40 on 17, 22% return. Like I get the numbers, but like, so that's $40.
Right.
That's good stuff, 22%. Let's say I can buy this at 140 and sell it at 180, 190. The percentages are better. Same dollars, percentages are better, but I will sell a third of these compared to those.
Heard.
So you can't just go like, well, the percentages are really good on this. I'm going to go buy 100 pairs. So if you buy 100 pairs of these and 100 pairs of these, you're going to be sitting on some of these pairs while those sell out.
Yep.
So you have to take into consideration how you can sell it. And so to Bryson's point of talking about YouTube, everything is about the sneaker market's dead, the sneaker market's dead. The sneaker market's not dead. The sneaker market, as most people understand it, is dead. So when you set up when somebody set up their business and they acquired it a certain way and they sold it a certain way, a lot of those channels are dead in a sense of like buy channels and sell channels.
Which is why you should have to create different verticals.
So a consignment store that I consigned heavily at a couple years ago that I did really, really well at, I sell like 5 pairs a month now. And I'm pulling all my pairs out of there. That selling channel just changed.
Yeah.
Nothing against the consignment store or whatever. Hey, you do you, I'm gonna do me. But 5 shoes a month doesn't work for me.
Right.
So I've had to find other channels to sell.
Yep.
And so I have those channels currently, and we've worked on them really hard to shift. So where we buy shoes has shifted in order to acquire, and where we're selling them has shifted in order to get that spread, buy low, sell high.
Right.
So the sneaker market is dead for most people, but not everybody.
Yeah.
If you haven't pivoted, then you're gonna say the sneaker market's dead, because as you went, so goes the business that you had, because it shifted. Why would a store do consignment?
Because they can't afford to buy the inventory for themselves because they don't have a liquidity position.
So a business lacks capital, and so they have to do consignment because they don't have the capital to invest in shoes to make a larger margin.
Correct.
Okay. So when you consign at a store, you're investing in that business. Your shoes are there, your capital's there, and what you're investing in is a business that has low margin because the consignment is lower than what they could sell, and you're investing in a business that has low capital. So be cautious. Don't just be like, oh, I can just go do consignment. And people are going to roast the crap out of me on this because they're going to have a store and it's going to have consignment and they're going to take it personal.
100%. They're like, well, my store doesn't do that. My store is nothing but good business, and they pay me out on time, and I'm getting 30% return on.
Well, and
it's pretty till it's not.
And that's true until it's not. And look, business is simple, but it's so hard. It's your expenses divided by your margin, 25, 35, to get your break even. And as long as the store is selling enough to break even, it's great. When it's not selling enough to break even, it's not great. No. And then consignment checks come later, and then they change the consignment fee from 20 to 25 because what they're trying to do is increase their margin.
Yeah.
So when a store does consignment, it's because they have low capital. And look, if you have a store and you've done consignment because you don't have the capital, that's a way to grow your business. I get it. I understand. But there's got to be great fundamentals based in that business in order for it to protect the investment of the consignment.
Yeah.
It's just a fact. So there's ways to grow a business. Like you guys don't have any consignment, but you have
we have Red October. Guys asking.
Okay,
NASA.
fair enough. but overarching, you're not a
No,
consignment
we don't do
store.
consignment.
You're not managing a bunch of consigners. Your margin's a lot different.
A lot different.
A lot.
Our margin's
most
not
cases,
20%.
it's double.
Yeah.
Okay, so
Well,
if
in the mall fronts, yes. As an overarching blending, yeah. Not
we're
double.
just talking.
I just don't want anybody to take the wrong.
Well, who cares? What are they going to take it wrong? You're running a business that's got better margins. Take pride in that. There's a reason for that.
You know
the
what? I will
marketing,
take pride in that.
how you acquire the shoes. If you look at Common Hype's discipline and how you acquire shoes, you're marketing stuff to sell a shoe at a certain price. The margin is a representation of how well the business is set up. We're going to buy low and we're going to sell high. So when we buy low and we sell high and we have a margin that's better than everybody else, we're nervous to say anything. It's not like we're being arrogant. It's just the numbers. Mm-hmm. So if you have a 20% margin, and let's say your expenses are $40,000 a month.
Yep.
Let's say $30,000 a month. You have $10,000 in rent, you have employee costs or whatever, your expenses monthly are $30,000 a month. If you have a 20% margin, you have to sell $150,000 a month to break even. 30,000 divided by 0.2, 20%, you need to sell 150 grand.
Which is what a lot of consignments are. Stores are. They're 20%, and I don't know what.
25 or what maybe they sell.
Yeah.
Okay, 150,000. Most stores are doing 1.2 million.
A year, yeah.
2 million, that's 160,000 a month. That's 100,000 a month. That's tight. The difference of having a margin of 40%, if you have a $30,000 expense monthly, is you need to do 75,000 in sales. You need to do half the sales. Guys, that's just business. Every business owner is really hesitant to talk about their numbers and stuff, and they kind of they fudge them, and because it's a real ego thing. But the reality is the more we share and talk about it and we educate and we learn, then we can be better business people.
Yeah.
Because at the end of the day, there's a lot of sneaker businesses that are just set up wrong. They just got set up wrong. Mm-hmm. Because no one was giving them advice, no one was giving them input, and they believed the hype, and they took their 25% margin and they thought they were going to sell 300,000 a month forever and ever.
But nobody taught us how to run a business too. So we're all just coming from sneaker resell and just like, okay, yeah, we're making dollars. But before I met Johnson too, I didn't understand what these were. I never got taught this in college.
Yeah, it's a really immature market in a sense that, a sneaker reseller becomes a store owner, becomes a business owner, which is awesome. America was built on small businesses.
Yeah.
So don't misunderstand this. It's awesome. But America sucks. Short of just the school of hard knocks, America sucks. And I only say America because this is my country. Proud of it. I love it. I'm going to speak about other countries because I live in America. But America sucks at teaching business. Mm-hmm. There's some colleges and stuff, but they're not attainable by everybody. But most colleges don't teach well. They don't teach finances, they don't teach taxes, they don't teach simple P&L business and setup. now look, some colleges do, but overarching, we don't. Our kids are just come, you graduated from ASU and you come out and you're like, Johnson, we sit down for an hour and I learn more from you than I did in, a year of college.
Yeah.
It's unfortunate. Yeah. So we're learning by hard knocks. The sneaker market is learning it. I love the fact that people are saying sneaker market's dead, because those people that aren't going to want to lean in and get to that next level or pivot will just fall off. Less competition.
Yep.
Great. So the sneaker market's not dead, it's shifted. And a lot of people are going to be struggling to shift because they've signed leases in their stores. They're hedged up on consignment, so their margins are set really low. They don't have the capital to invest in shoes in order to increase that margin. And so what do people need to do? They need to start grinding. They need to lower their expenses as low as they can. They need to go be working 75, 80 hours a week, because that's what small business owners do. And they need to get focused on building capital in order to invest back in their inventory to raise the margin. What I've been hearing out there is, no, you need to do more consignment so you can just expand to 2, 3, 4 stores and everything, so you could be the next Stadium Goods, Flight Club and stuff. Don't do that. You're taking on more debt.
Yeah.
When you sign a lease at $15,000 a month, that's $180,000 a year for 5 years or whatever. You're signing $800,000 in debt. You got to have a plan. You got to get your margins increased. So, man, we could talk forever and days on this, but you got to get back and just start grinding, build the capital in order to raise your margin up and up and up.
Just as a reminder, Los Angeles Got Soul is tomorrow. We will be in the building. Lots of other people are going to be in the building.
Los Angeles?
Los Angeles. You going to be there?
Who says Los Angeles? You're obviously not from there.
No.
LA Got Soul, okay? We call it LA. We don't call it Los Angeles. LA Got Soul, September
7th. Tomorrow.
Be there. Here's why. Great time to buy.
Great time to buy.
I called you the
you'll
other
see in
day.
this video. It's a great time to buy.
Great time to buy. Show up at Got Soul, buy. Because remember, we're buying in September and October to sell in the holiday time. And if you've got a table, sell, right? Move your capital, sell it to Brandon so that he can make money in the holiday, okay? Get it done.
That's right.
So Foot Locker has reported for the last year losses on their profit. Mm-hmm. They're not making money. Dick's is low margin, like 3%, 2%. Retail is low margin. Mm-hmm. So you gotta get high volume in order to make, but 2 or 3%. Yeah. You guys aren't at 2 or 3%. Mm-mm. You're higher, you're in the 10 or whatever. Yeah. The reason you are is because your margin is high.
But that's the only way to get that number out.
It's the only way, because
unless you're doing, but nobody's doing, $5 million
that's why
in sales a month anymore.
That's why I think personally, and the YouTube's going to kill me on this, but that's okay. Sometimes you don't like to hear what may be, and it's not like I'm a predictor, but when things shift, so consignment it's not going to die, but there's going to be a shift away from it.
You just can't sustain it 20%.
I just don't think
there's just no world, in my opinion, where the consignor should be making, you're literally making the consignor so much more money than you're making your actual store, right? Mm-hmm. And I think at the end,
that's the fact. So when those two worlds collide, the business owner with the store wins.
Yes.
Or the economy wins.
Right.
Or the landlord with the lease payment wins.
Right.
So when 20%'s not enough, consignment payout should be 25, 30%, because the store needs 30%
to operate.
To operate and to reinvest back into the business.
Yep.
So when you consignors are out there, like, I love this store because they pay me 20%. Well, they're only making 20%. So the partnership has it's unequally yoked. And look, no business owner starts up to just trade dollars. Mm-hmm. Look, every business got to make money. You shouldn't be embarrassed when you're like, hey, we're making money. All the employees should know we're making money, because that's how there's job security. That's how we sustain jobs. So if your company is making money and the owner's doing well, you should celebrate that, because at the end of the day, that's where job security comes from.
Yep.
When businesses are just making enough or getting by, then anything can change at any moment.
Yeah.
And the economy is only going to get a little bit more challenging as we go. So my encouragement would be to stores and stuff, really take a look at what you're doing and think about raising your consignment to get your margin. Talk to your consignors about what you need to do, communicate well, because a couple places I consigned at didn't communicate well. They changed the consignment and I can't even keep track of what they're trying to do. And what they're trying to do is they're trying to make the profits to pay the bills.
Yeah.
I mean, that's what they're trying to do. I mean, it's business. That's what they have to do.
Yeah.
I'm not critical of that, but communication is key. Stores need to shift from trying to expand and do more by having consignment to contract back, build capital within your business so that you can invest in higher margins.
Yeah.
And there's people that are going to disagree with me, and that's fine. There's two different ways to do business.
Yeah.
You could do it. You could do it the
I also think
lower margin way. That's fine. It's not. There's different ways to do business.
I also think consignors have way too much control over the store owners. Because I don't think in any world you should have a situation where you're running 20% consignment rate and a guy's able to sell this for $150 in store and
perfect. So because it's about the dollars.
Right.
So if
but it's like, hey, if
this is important. This is important.
Yeah.
This box takes up as much space as a grade school pair of White Thunders. Okay? It's touched the same, it's run across the counter the same, the sales associate does the same, you hand it to the person the same. There's no change as far as the dollars it takes to move this through your store.
Yeah.
Agree? That's what you're saying.
Yes.
But I bought this at, my consignment, I'm gonna sell it for $150. My consignment's 20%, so I'm gonna keep 30, and the consignor gets $120.
Right.
I'm making as much money as a store, and I did nothing.
Not a single thing.
Right? As opposed to I sell the grade school pair of that for $250, 20%'s $50. So the store gets $50 to sell this, gets $30 to sell this. The store's making money on this, it may be losing money on this. So for a legacy, the guy that's legacy, I don't know that guy, but I watched that video.
Right.
If he's watching it, look, I probably can't teach him anything about business. I mean, I do paint business and I do real estate, big deal.
Plus that guy's been in business forever.
But if he's got, taking the 20% factor, he's got a store across from the Empire State Building. He's got a bunch of tourists in there. They probably spend more than if they walk somewhere else, right?
Yeah.
Because location is everything.
Yeah.
Why would he do 20%? Why wouldn't, because he can get a higher premium. So why would his store, who gets a higher premium, who's got to pay $150,000 in rent, why would he give a consignor a payout of $300 on this when the payout should be $270? His payout should be $270. The fact that he can go sell it for more, he should keep those to him.
Yeah.
He should keep those dollars.
Yep. I agree.
So that's reiterating exactly what you're saying. And that's why I think that, like, what we're talking about, like, you guys can roast me in the comments all you want, but that's where the tension is.
I don't think they will, by the way.
But that's
I think
okay.
they're spitting right now.
That's where there's tension. I have phenomenal conversations with Bo Williams. I love that kid is a
Shout out
hustler.
Soul Swapping.
And I'm calling you a kid, Bo. You are not a kid. You are a grown man, and I love your hustle. But we have conversations about just risk. If you have $50,000 of capital consigned at somebody, that $50,000 is at risk.
Yes.
You have to assess at how much risk that is. Mm-hmm. That's up to you. But that's the business that you're in. But understand the business beyond just I consign it, they sell me, they give me a check, I make 20%. That's a real naive way to look at that, by like having 50,000 in the stock market and not having any idea about any of the companies that you have.
Yeah.
And then all of a sudden it goes down 15% and you're running around trying to figure out how to sell it. And you know what? When all you guys sell your stocks when they go down, you lose money. I'm buying when you're selling. So I'm winning when you're losing. And,
so
and Warren Buffett's winning when you're losing. So when on the other side of somebody making money, somebody losing money.
Yeah.
My simple point is stores and consignors don't have attention that's coming.
Yeah.
Because at the end of the day, Mr. Market, Mr. Economy wins out and it shifts things. And store retail can't survive on 20% margin.
They can't.
They can't.
Which is crazy that you'd be saying that your consignors are running you out of business, but at the end of the day, they are.
Well, there's only one person that runs somebody out of business, and that's the business owner. The consignors are not running them out of business. Just challenge you back.
But you can't.
The business owner has agreed that this is how I'm going to consign out, and the consignors are just agreeing to whatever Business owner can say, I'm going to do 25% now, I'm going to do 30% over the holidays, and it's going to be forward, and this is what we're going to do. We're going to do payouts, $270 for this. You got to figure out a way that your margin can cover your bills so you can stay around.
Yeah.
Because if you don't stay around, then everybody loses. Yeah. So it's a business owner's responsibility. The consignors need to understand both sides of the business so they can be good consignors, because it's your capital that's working in somebody's business.
Correct.
You would never, that'd be like me giving somebody a $50,000 loan without having any idea about their business. Why would I do that? But I'll give you my shoes. Yeah. So you just have to make sense? Are you just gonna write a check for $50,000? Hey, good business owner.
That check's gonna bounce.
Right? So those are the things. So I like to be more in control of my stuff. I'm a lot more hesitant on consigning right now because as the market gets tougher, I want to be in control of my own destiny. I mean, it is hard work. You got to understand your numbers. And a lot of us just don't understand the numbers. And it's going to be hard because you're going to watch this video and go like, well, I'll never know the numbers like Johnson. Like you and I talk about it. Like I'll spit off 22%, 20, and you're slower than that. Okay? No, it's not over your head.
But I just have to pull up my calculator and do okay, what's 20% of 150.
And it's what I tell you. Pull out your calculator and do the math.
Yeah.
You don't have to be a numbers guy to know the numbers.
Yeah.
And I think that's why there's a lot of business owners that don't know the numbers, because they just go like, I'm not a numbers guy. You have to know your numbers.
Yeah.
There's nothing more humbling to a man's opinion than the numbers.
Yeah.
You have to run your business based on the numbers and then your gut and your feel, but you have to know the numbers.
Yeah.
Because you're either going out of business or you're getting better based on your numbers, and if you don't know them, then you may not know that you're going out of business.
Yeah.
I love the sneaker market as it sits today.
I love it too. I just think it's more attainable currently.
Well, there's less competition. The acquisition price is lower, so people's inventory should have gone down, dollar-wise. And if you can turn the stuff, your return on invested capital should be a higher percentage.
Right.
But that's big business stuff.
Yeah.
That people need to learn and research and understand.
Now you're saying the sneakers market's not dead, but you don't have a lot of dunks in here, right? But you also,
yeah.
This is coming from Common Hype sells, we sell a lot of dunks, right? Whereas Johnson Sneaker Co., you are very into specific products, but you're all about top 25 selling SKUs. Like if it's not in that range, you're not really a fan of it, which is different from your outlook 2 years ago when you were kind of buying just everything that kind of looked cool.
Well, everything sold back then.
Right.
So it didn't matter what I bought. Everything I bought turned to gold.
Yeah.
It wasn't because I was awesome. It's because the market was awesome.
Sure.
And it created terrible tendencies for me, honestly. Like, y'all want to hear the truth? When things are really good, you become a terrible businessman because you just believe the crap. The market's good. You're not good as a business operator. The market's good, and it's floating you. Today, I like it better because it makes me, I think it makes you and us better business people.
Yeah.
I don't have a lot of dunks because my selling channels are tough, have changed and stuff, and it's hard for me, even though I can acquire a dunk at $80, $90 or $100. Like I can't acquire them. Like I can acquire some.
Yeah.
Like I got those UNC dunks I got at $88 and I'm selling them for like 110 right now. So those look like I'm brilliant, but I find it hard to buy Panda dunks and Gray Fogs, which are high selling dunks and stuff, and make any kind of money other than $10.
Right.
And for me to handle them for $10 is just
not worth the time.
It's not worth the time.
Yeah.
I mean, it may be a percent, it might be a 12% number.
Right.
But the dollars matter too, because I've told you before, you deposit dollars into the bank account, not percentages.
Right.
So why do I invest in sneakers as opposed to real estate or whatever?
I mean, it's not like you don't invest in real estate and stocks either. It's just another vertical for you.
Yeah, it's the enjoyment and the love for shoes and the analytics of it. Because really, if you listen to me talk about shoes and how much I know about shoes, you'd be like, well, if you took that energy and put it into researching a few more companies, I could make more money on investing in stocks. True. That's true. But then it wouldn't be shoes. It wouldn't be something that allows me to engage with you guys and different stuff. So there's, you know, not everything has to be about just making money and the percentage return and everything. There's enjoyment in whatever people are doing. So if people enjoy doing something and they make 12% instead of 15% and you enjoy it, then you should do what you enjoy. Same thing with your job. Who cares if someone will pay you 120 grand? 120 grand and hate my job, or 100 grand and love my job?
Yeah.
I'd rather be in a place where I'm making 100 grand loving my job.
Sure.
So this is just about a love that I enjoy, and I can turn it into kind of a game in such a way, but you know, research and analytics.
Sure. So if someone's watching this video and let's just say they're an investor and they haven't gotten into shoes, what would be your best advice for them getting into shoes?
Let's shift the question a little bit, because if someone's got 100,000 sitting around and they're wondering what to do with their time and they're intrigued by this conversation and stuff, go buy an S&P 500 ETF index and just and mindlessly do nothing.
Yeah.
Just put that money in there and let it work over the next 10 years. But if you are someone that has put some time into the sneaker business, learned some stuff, taken your lumps, got some black eyes from, you did really well a couple years ago, you were killing it, you've been taking it in the shorts the last like 6 months to a year, not making any money, have some capital, what should I do? Should I get out of it? Should I go in it? Look, I think you could absolutely stay in it. The problem with people is they jump too quickly from one thing to the next and they try to chase money. Mm-hmm. You shouldn't do that. You should stick to what you know. So if you know sneakers and been in it, stay in it. Just become a student better than what you've been. And so yeah, if you had some extra capital and you're in the resale business and you're like, I feel like the sneaker market's dead. Okay, well, I don't think it's dead. It's just where the playground you played in is dead. So what you should do is do some research and do something like what we're talking about. Turn and burn these, right? Get into some Yeezys and find a way, but you've got to find ways to buy that are maybe different than what you're doing, because your acquisition price has got to be as low as it can be. But you got to understand your selling channels and what you can sell at. So you don't just go buy something and be like, hey, I think I can sell it for more. Yeah. No, you got to know exactly where you're going to sell it, when, and for how much.
Sure.
So those are the research that's done. Mm. And so I think where you deploy money would be into the top selling stuff. It's not the random stuff. Pre-owned sneakers
do really well.
Is a huge thing right now. If someone doesn't have the money to spend $500 on this, maybe they'll spend $300 on a used pair.
Yep.
So if you can get somebody out of their used pair for $200, $180, put some clean on it, sell it for $300, you're making money. And so pre-owned has become hot, and that's not a surprise because people are more cautious of their money. Yeah. They have less expendable cash.
Yeah.
So pre-owned's a great way. Silhouettes that sell well, just go on StockX and look at the top 25 sellers. Get in and out of stuff. Understand you're buying in September, October to sell in November and December, and just turn and burn your inventory.
Yeah.
Do not sit. There's no such thing in my mind of holds. Don't look at this inventory and think, oh man, the thing to do is holds. Because if I could redo the bread move, what I would do is I would have bought in April, May what I was going to sell it back to school, and then I would have bought again in September and October to sell at the holidays, exactly what I'm doing with military blues and exactly what I'm doing here.
Yeah.
So holding is kind of dead. Money to be made in this market. Sneaker market's not dead. Sneaker market as you know it a year ago or 2 years, it's dead. But it's shifted, and so you have to shift with it.
This is a long video, a long spiel, but I hope you guys
that was
enjoyed it. I mean, we just spit as much game coming from Johnson, who is pretty knowledgeable, I would say, in the business world, and obviously with sneakers themselves too. Like I mentioned in the beginning of this video, if you guys want a free week to come join Strike, you guys want to learn more about this, is where I learn all about this. We talk about all this on a day-to-day basis. There's store owners in there, there's a lot of sellers in there, and a lot of buyers in there if you want to make the connections. If you want to go buy White Thunder 4s, we can sell them to you, or from other members in the group. If you want to go sell them, other people off the group will sell them to you as well. join the link. It's a free 7-day trial. You can cancel at any time. There's absolutely no risk involved in that, and I highly recommend you guys do it. There should be, if you resell sneakers, you should be in the group 1000%. There's just no reason for you not to. So hit that link in the description down below in the pinned comment.
And you should join. Look, I'm a part of multiple things that I pay $70 to, $50 to. They offer me some software where I can do stock analysis, where I can do real estate analysis. Like, I invest in that, but I lean in order to learn from it. So if you're going to invest in Strike and you're going to sit back and go like, man, nobody's teaching me anything. No, you're not learning anything. So a lot of it is get into the group and then lean in and start to take in the information, build relationships and network. It's as much effort on your part than it is Strike. Strike has the people in it, the willingness to help, but people have to show interest. It's just like anything. 100%. You can't build a relationship sitting at your home going, man, I wish I had some friends.
Got to get out. Go make some friends.
You got to get out. Yeah. You got to go work. And being friends and having relationships, tough. Well, that guy pissed me off. Well, okay, well then go have a conversation and work at it. It takes effort. It takes, leaning in. And it's business is the same way. Friendships and relationships are the same way. And I said, look, the coin phrase is, if it was easy, everybody'd be doing it. Wait, that was the sneaker business 2 years ago. It was easy, everybody's doing it. Now it's not. The people that are willing to do it and do it well are gonna make some money.
Yeah. Drop a like. Shout out to the GOAT, Mr. Johnson.
Thanks for having me.
Thanks
Appreciate you guys.
Here. It's been a while. I hope you just drop comments. You guys want to see more of him. He'll be with us more, I think, in the holiday season. We'll be talking more about shoes. I know you guys love this type of videos, and it's a good one. Sneakers are not dead. Make sure you guys, again, enter the giveaway down below too. Drop what your favorite part of the video was. Like this video, subscribe to the channel if you have not already. Remember, 1 month from now, from this video being posted, we'll pick someone to win a free pair of Yeezy slides. Pick your color, pick your size. Really don't care. It doesn't matter to me. Thank you again to Johnson for being here. Much appreciated.
Yeah, love you guys.